Hello, my dear students. First of all, a big congratulations for clearing your CA foundation. Now, you're just 2 steps away from your dream of becoming a CA. CA Inter and CA Final. So, obviously, one step is gone less and you're feeling great about it. You're getting one step closer to your dream. But you know what? CA Foundation, CA Inter, there are really two different things. When we talked about foundation, whatever marks you got, absolutely fine with that. But now in CA Inter, it's going to demand more hard work, more patience, more perseverance, more discipline, more sacrifices, and obviously a lot of studies. So with this thing in mind, that we are going to work hard towards it, we have to start our journey. Today on day 1 of our journey, we are going to make a promise to ourselves that we are going to put in our best in these next few months that are there. See, in foundation, your number of hours, your number of subjects was all very less compared to CA Inter. Now, CA Inter is you're having 6 subjects in the new syllabus. 6 subjects are going to take a lot of time. Plus, last 3 months you have to keep for your self-study. Just before your exams, 3 months are complete self-study. So, need to plan in such a way that in these 5.5 months which are there, you need to complete your 6 subjects, which is very well possible, but it is going to take lot of efforts, hard work, and lot of hours that you have to put in. So you would be having at least about 8 to 10 hours of lectures. Apart from that, you will have to do at least 2 to 3 hours of your homework. So that's not going to be a very easy task, correct? But because we are so enthusiastic for doing it, we know we have to achieve this. So definitely we are going to work hard now. And you know what? The consistency is always very, very important. When we start with a lot of intensity, like we start with a lot of things in mind, yes. But then slowly, when we lose path or we lose the zeal or enthusiasm, then that consistency is where a student will get successful. So it is that day, every single day when you get up, push yourself. That is when you're getting closer and closer to your dream. So you have to understand that we are not going to get tired. We are not going to give up. We are always going to be motivated. And then you become unstoppable. Nobody can touch you there. Remember that. So day 1 only promise yourself you're going to give your best, as I already said. And at the same time, you're going to work very hard. Obviously, I'm there to guide you, right? Your teachers are there to guide you. You have your parents, your family to support you. But end of the day, the journey is mainly yours. So you have to make it a point that whatever distractions are there, for a few months you have to forget all that. Including like everything. You have to make sacrifices. CA journey doesn't test you only on your knowledge. When you become a CA at the age of 21, imagine. It's 21. There are so many people who have not even become professionals as a study. But you have become a professional. That too with 2.5 years experience. Let's say articleship experience. So this is going to demand sacrifices, right? And you know, when you get in CA, you know very well, after hearing so many things from people that yes, CA is so difficult, the results are so low, and all these things, still we have come here. Because we know the kind of respect what we get after becoming a CA. We know the kind of happiness that we are going to have, our family is going to get after we become a CA. So keeping that in mind, you have to keep yourself motivated every single day. And that is your journey, that is your testing. So like I said, it's not just knowledge. It tests your patience, your perseverance, your discipline, dedication, everything. The sacrifices that you're going to be making all this time. By the age of 21, you're like right now 18, 19 years of age, you're so young. But still, you're going to put in so many hours of study. That shows your dedication. So that's exactly what I want from you. Day 1, promise to yourself. And not going to give up in between. There are going to be times, dark times, problematic times when you feel, oh my God, so many things. How are we going to remember? How is this going to happen? How is that going to happen? It's absolutely normal. Being anxious, panicking, panic at times, it's absolutely fine. But in spite of all that, getting up and going on is what is important. So this is what you have to understand here. When we talk about foundation and we talk about inter, the basic difference comes like how we have in cricket. It's a 20-20 match. which I consider CA foundation. Amazing. Okay, you enjoy the journey, everything is done, and in spite of, maybe not doing too much of studies, also you can still clear. And I'm saying that very bluntly because it can happen. But that will not happen in inter and final, because inter becomes a ODI, a 50 over match. From 20 overs, you come to 50 overs, right? From 4 subjects, you have come to 6 subjects. And when I say 6 subjects, there are subjects and subjects. Like you have got FM and SN, you have got DT and indirect tax. So automatically what happens is you are definitely getting into something bigger. The time that you had there to complete those 4 subjects and the time that you have to now complete your 6 subjects, compare and see. You'll understand what I'm saying. Correct? So MCQs there you had got 2 full papers, 200 marks. Here, my dear, MCQs are 30 marks each paper, which is a very good thing. Earlier, we did not have all the papers. So, the new syllabus, these are the good things which have happened. But at the same time, understanding that, yes, like I said, working hard. Promise yourself, promise your family member, anybody today, and start your journey. Okay? So, now, when I was telling you about this 50-50 match, 20-20, then 50 overs, that is ODI, and then my CA final becomes test match. There though you have to be even more patient. Strategy works over there. And inter, you need both. You need strategy, working hard, because it's like a sandwich between foundation and final. So maximum, people say foundation is a filter. Those who cannot clear, many of them leave in foundation. But what I have seen with practical experience, inter is a bigger filter. There are so many students who don't work hard, or they are having some problems, and then they get stuck in inter and they don't know where to go. So that's why inter, you have to be even more careful. Not trying to scare you anything. I'm just getting you prepared mentally for what is going to be happening. Lot of things to learn. So many subjects, all diverse. But still, we have to go for it. Like I said, we have come here by our choice, by our will. So becoming a CA, we know we have to go for it. Also, now you have to decide on a proper timetable how you're going to be doing your studies. So when we have this, you have to decide, so many hours are going to be for your classes, for completing all your subjects. Like 3-4 hours you have to give, at least 2 hours, minimum 2 to 3 hours for whatever is happening in that lecture that particular day, on that what you have covered. You need to revise it in time. So you need to have a proper schedule. About 12 hours you will be putting in. Remember that. So that you need to understand. Plus, as much as possible, try to simplify the things. When you are studying it for the first time, any particular thing, you should see that you do it in a proper manner. If you're not understanding, you try to see it again, understand it properly, write down, jot down all the important things, so that next time when you study that, you are very well prepared. You have already done all the work. So that is very important. Okay, along with these 12 hours that you have to put in every day, you have to obviously balance it out. You have to also have a little bit of enjoyment, and enjoyment something which is going to refresh you, not the mobile and screen time which is going to in fact even make you more tired. So you have to properly chalk out this plan. And once you chalk it out, remember the last 3 months you have to keep for self study. So that exact planning is very, very important. Okay, and focus on what is to be done. Fair enough. Whatever daily you're doing, the homework has to be done. Whatever daily you're studying, little bit of revision has to be done. The revisions little bit we'll also do, like what we learned today, the next day we revise it also. Okay. Whatever homework you're doing is also kind of revision you're doing, practice of the same. So in practical subjects, main thing is practice. The more you practice, the more things you do, it helps a lot. So this you have to keep in mind. Okay. And practice means you have to solve, write and solve. Not going through the answers, just going through the books. No, that's not how it works. You have to sit and practice. Many people feel that, the last few days of study is actually what only gets you marks. No, it is the entire period that you are working every single day that is getting you marks. They feel that one day before we have done something, that's it, that gets us marks. No, it's not true. You have to do everything every day. That is what will make you successful. Okay, so keeping that in mind, let us now go ahead. Now we will be talking about our paper number 1. That is advanced accounting. Now advanced accounting, when we have, initially we had got 2 papers. One was accounts, one was advanced accounts. Now they have combined the two and we have got one single paper of advanced accounts. So now directly advanced accounts. But of course, when we try to start with the basics and then we will go to the advanced part. So what all you have in your syllabus, what all, like how we'll be covering it, everything I will tell you in short now. So we'll have a basic introduction of the whole thing. Okay. So now coming to the main thing, first of all, advanced accounts, you're becoming a chartered accountant, right? Accountant. Your degree only has this subject. So obviously you have to be amazing in this. You don't have a choice here, correct? Because accounts, if any problem is there, people are going to come to you only. CA, they're going to come to you only. So the point is when we learn accounts, remember this knowledge is which is mainly with us only. We talk about accounting standards. You have all accounting standards in CA intermediate. I mean, in so many years, whatever I have taught, I have seen that, intermediate, we had got selected standards. There are some difficult accounting standards like AS 15, AS 28, which sometimes CA final students also find little difficult. Now in CA inter, you have to do it. So it's going to be challenging. So anyways, the basic syllabus of our advanced accounts starts with our chapters and then we have got our accounting standards. So broadly we divide our syllabus in two parts. One are the chapters, one is our accounting standards. Okay. Now when I say accounts, right? How did accounts originate? From where? So accounts goes a long way back. Long way back it goes to the times that the first time we got double entry system. That was in 1494 by an Italian economist, Luca di Pacioli. He was the one who gave us the double entry system. From 1494 till today, our double entry system has remained. It is still the same. What could be the reason? These are small interesting things which we learn over the course. Very simple thing I'll tell you. Everything in my accounts mainly depends on debit and credit. Just two things. Everything, how can it fit into debit and credit? And how over the years we didn't need anything else? Because everything when we talk about business, in fact even life, it's all about give and take. So it's debit, something is coming, credit, something is going. A basic thing. So there's nothing called free lunch in this world. So this basic principle is what accounts is all about. Okay. So basic accounting you learnt in your foundation, right? 11th, 12th foundation, you have learned everything. But you know what? There are few things which you have learned there which are not even correct. Sorry to say that, but this is true. There are a lot of things which you will learn in foundation, which you had learned till our 11th, 12th were not correct. Which you will learn in the accounting standards, I'll tell you that time. So now you are going to learn the true accounts. So now, coming to our syllabus and the weightage in the exam. Okay. So basically now you can see, as I told you, you have got total 10 chapters. The 10 chapters which I have in my book number 1. Just we will have a briefly I'll tell you about these 10 chapters. The first one, Introduction to Company Accounts. This is a little theory chapter which we have talking about companies, which you will be learning in CA law actually. Your law, inter you will be learning these things. Some of this you've already learned in your foundation, little bit I guess so. But not much, not so important. Schedule 3. The first one that we really call as the first chapter, that is schedule number 3, which we'll be starting with the first topic that we will be learning, where you'll be shown how the company final accounts are made. Okay, the balance sheet, what is the format, the P&L, statement of profit and loss. We are used to calling it P&L account. I was telling you, many things we learned. Now we have changed, right? So what we learn in 11, 12 foundation, P&L account, okay. Companies, we don't call it P&L account. In companies, we call it statement of P&L. So SOPL is what we call it. But what I'm trying to say, these are small things which you will get over the course now. So schedule 3 basically talks about this, the balance sheet and the P&L format basically. So and how the final accounts are made. We'll be learning that. Then we'll actually be making the company final accounts. That is my third chapter, preparing the FS. Then we have cash flow statement. That is our fourth chapter, which is based on an accounting standard 3. And then fifth chapter we have is buyback of shares. So these are the 5 chapters which are the basic company accounts, I call it. It's not very advanced level. And Then the advanced company accounts, what we have, amalgamation of companies. When two companies merge, what happens, how the accounting is done. Or when one company takes over another company, how the accounting is done. Very interesting, very important. AS 14 is that chapter. Then the next chapter we have is internal reconstruction. So when there is a company which is not doing well, it is loss making, then how that company, internal reconstruction is basically how that company is revamping the entire operations, and then they are going to do better. Like there's a procedure, legal procedure which is followed. So that we will be learning. Of course, there are a lot of accounting there. So once we learn Schedule 3 format of the balance sheet, same thing we're going to need in buyback, amalgamation, internal reconstruction. So we need that basic format. Okay, so that is all linked. And the last chapter in company accounts I have is CFS, Consolidated FS. You might have heard of holding companies, subsidiary companies, right? So holding company, when they consolidate and do their financials as one, including their subsidiaries and all, then that is called your CFS. How that is made. Very interesting. AS 21. Okay. So these are the chapters which are in company accounts, and you can see the weightage of that, 35 to 40% in the exam. This is from only company accounts we are going to be getting. Then we have got two chapters which are not for companies. This is for like others we call it, like investment accounting. How we account for investments. So as an individual or as a partnership firm, anybody who is having investments in another company, then how is that accounted for? Is AS 13. Okay, but that is an AS based chapter, but it is not for companies. It is for like anyone and everyone. And the branches are there in the last chapter. We have 10 chapters we have in our book 1, which are all these chapters. The 10th chapter is branch accounts. Branch accounts talks about like when you have branches, multiple branches, whether Indian or even foreign branches, how we understand the profits of the branches, how we do the accounting, we will be learning there. Okay, so 10 chapters, which is our book 1. Okay, these 10 chapters, if you will see total, is like around 45 to 55%, means half your marks, half your paper is going to be based on these 10 chapters. Okay, you can get a MCQ, you can get case study, you can get 5-mark question, or you can get 8-mark, even 20 marks questions possible from these chapters. Okay, in these 10 chapters, there are 4 chapters which are based on accounting standards. As you can see, AS3. Yes, we can see AS3. Yes or no? AS3, AS14, AS21 and AS13. 4 chapters are based on accounting standards. Then what we have is our AS, second and third book. 2 books are there for accounting standards. Okay, because you have got 29 total accounting standards which are there, out of which 2 have got deleted. AS6, which was long back depreciation accounting, and AS8, which was longer, even further back, it was about research and development. Both AS are not there. So they are 29 AS1 to 29, but 2 standards are not there. So effectively 27 accounting standards you have to learn. Out of 27 accounting standards, 4 are learnt in the chapters only. Okay, so 23 accounting standards you have to learn separately. And for those 23 accounting standards, we have got book 2 and book 3. So total 3 main books which we have to cover in our class. Okay. Also, in the same chapter, in the AS only, we have got about our introduction, applicability of accounting standards, to which companies they apply, what is Ind AS. Ind AS is Indian accounting standards. So what is IFRS? These all things we will be seeing in our AS topic. Then the framework for preparing FS, that is also one small chapter which is there. Based on that only the entire accounting standards are formed. So what is that? That and the AS will be learning in our book number 2 and 3. So how will we be learning all this? Okay, so we'll be starting with our chapters first. I'll start with some smaller chapters, first get into the flow, and then we will have some maybe mid chapters, and then in the end I'll go for the difficult ones, right? So CFS, amalgamation, I'll keep it towards the end. End means end of the chapter series. Okay, because that is when you'll be understanding it the best. Also then accounting standards I have not yet planned, but maybe we'll be taking in between some, or we'll be taking it at the end. Let's see how it works. Definitely the advanced ones we'll be taking at the end, and some basic standards in between we can go for it. So just as a change, if you want the chapters, let's take some 2 or 3 AS, we'll be doing that. So let's see how it works. But eventually everything will be covered really well. You will not have any problem. If you're doing this properly, whatever we have, understanding everything that I'm doing, solving it in class with me, I'll tell you all those things, what is expected from you, then you will have definitely very, very good marks. Now you decide what marks you want to have, what you want to achieve in this subject. Today, on day 1 only, in your book, on the top, you write down those marks. Okay? If you want an exemption, and then nothing lesser than 60 is expected. Minimum exemption to you have to write. Because if you have come to me, exemption is not a choice. It is a compulsion. First thing. But apart from that, you want 80, 90, 100 also, you can get that. Because we are going to prepare for that. Okay? So you have to write what you want to get. And you can change that over the course. Upwards, not downwards. So if you decide 80 today, but then later on you feel I want to get 85, 90, no problem. We are working towards 100. So no problem at all. Okay. So this is how our first book is, where we have all our 10 chapters. Okay. Coming to accounting standards, I said book 2 and book 3. Clear? Now coming to the fourth book which we have, the master stroke book I call it. This master stroke book is just for additional practice. Okay, but you know what? Always remember one thing. The marks, how you achieve your marks, the later marks are more difficult to get. Like for example, what I'm trying to say. To get first 60 marks, the efforts that you require may be 100%. Okay, from 60 to 80 marks when you're getting, the efforts will be 150%. And when you want to get from your 100 to, your 80 to 100 marks, when you want to get that, your efforts have to be 200%. That is how the pyramid works. Okay. So master stroke book is that thing. It is that last thing which is going to be like the icing on the cake, where you are going to work for practice and getting those additional marks. Okay. There's not going to be something new in that. No, it is more practice, where you'll be getting questions with their solutions. You'll be having chapter-wise tests to know exactly where you're standing. So all that will be in the master stroke book. Okay. And for MCQs also, because now 30 marks MCQs are there, so we have to plan now how it will be going. We'll see how that will be done also. Either we could have an extra book, or maybe I could send you something. We could have an app. Still, it is in process. So this is exactly how your syllabus and weightages. Even your accounting standards weighted, see 55 to 60 marks. Not easy. Okay. So this is a percentage of it. This is like a range. Understand? So when I say accounting standards, little bit of overlapping happens in the marks, because some AS are in your chapter, some are, other AS. So it definitely overlaps. That's why you would see that the marks are like a little more towards AS, because some chapters also get covered in that. But anyways, the point is, we don't have a choice. We have to complete everything properly and as per the requirement of the institute. Now, what does the institute expect from you? See, institute is saying that we are going to test the students on two major things. One is going to be comprehension and knowledge. What is their knowledge? How much they understand. Comprehension means understanding. Understanding and knowledge. That will be 5 to 15% marks. 5 to 15%. That's it. Okay. Majorly, it's going to be analysis and application. This institute only has told that this is how they're going to be testing the students, or this is where they're going to be testing the students. Okay. Now, so in comprehension knowledge, the typical kind of questions could be like theory based. Definitions, the concepts, basically reproducing what you have learned. But the application part of it, which is majorly important, that is your 85 to 95, is actual solving of problems and all that. So that is what you have for you. Okay. And as we know the paper pattern, 30% is going to be MCQ, 70% is going to be questions. How the questions will be coming now, 2 marks, 4 marks and all, we need some paper to understand that. So we'll get some more clarification. Anyways, we are preparing from 2 marks to 20 marks, all types of questions. So it does not matter. Okay. How you test me is not relevant, right? When I know my concepts, I know how I'm studying. How you test me is absolutely not relevant. Okay. So this is what you have in your skill assessment and paper pattern. Now, our teaching strategy. I have already made a detailed video of our teaching strategy, okay, which is already on YouTube. You can see that, but I'll just in brief just explain it once again to you. So basically, our teaching strategy is based on two main pillars. The first one I called is old is gold. This is my first pillar. And second one I called is new in view. So I'll explain that. When I say old is gold, over so many years of experience that I have, like I've been teaching for almost 15 years now. So what I have believed that there are some things which never change in our teaching. That which is what I call old is gold. Like the approach for your studying has to be based on hard work, has to be based on, like there is no shortcut to success. You have to work hard. So that is what your approach only should be very much clear, positive, and yes, we have to work. Okay, no shortcuts. So that is the first thing which we have. A. It's A, B, C, D. B we're going to have is our books should be properly having all the things covered. The notes should be updated, concise, all that we have taken care of. Okay. C is what we have conceptual clarity, which is extremely important because without knowing the concepts, you can do nothing. Trust me, nothing can be done without the concepts. So conceptual clarity is a must. Coming then to the D point, which is doubt clarification. So whenever we are teaching, remember, out of experience, we know normally 90% of the places we know where students make mistakes or where they get the doubts. 90%. 10% I keep to your imagination. Because end of the day, all are students. Your imagination can be very, very wild also, or it can be some very, very basic things also can be asked. No problem at all. All your doubts will be cleared. Okay. Your doubts will be cleared either in the form of you can have WhatsApp queries, you can mail them, you can call, whatever be it. Okay. So that's it. And the last one in old as gold technique we have is exams, tests which are to be given. Like I said, chapter wise tests. We'll have 100 marks test later on. All that will be coming in E, that is exams and tests. So these five things, this is the pillar, the main pillar of old is gold. But along with that now, because of new syllabus, some new things also we need to have, right? So these are things like simple ones. Every chapter, after the chapter is complete, we're going to have a chapter wise revision. That revision lecture, I will be giving you little more views. Like for example, you have taken 1.5 view lecture. But the revision lectures will be little more. Maybe I'll give you 3 views on that so that you can revise it on multiple times. So that is what we will be having. When we are studying right from the beginning only, we'll be seeing like what is important. So after chapter is over, what are the major things we have here, or which sums are extremely important that you need to do one day before the exam. That we will be marking and keeping. Okay. So important things. Then we'll have marathon. Like once the whole syllabus over, we can have a marathon, which I'll be putting on YouTube also for the whole syllabus together. Revision of that. Then small tips and tricks. So anyways, while studying only, we have a lot of these things coming up. So that's not very, it's just by the way we do it. Practical corner, some real practical case studies. So we have going to see reports of big companies, Reliance and Tata and all these companies to understand how really things work. Whether in your practical subjects, practically we need to see things, right? So we'll be seeing that. MCQs will have a lot of practice and test series later on in the future we would have. So these are my two pillars of teaching strategy. Based on this strategy only we have come with our teaching style or our teaching technique, which we have got books, as I said, 3-4 books, whatever it is, maybe MCQ extra book later on we'll have. So all these are the books which we'll be giving you. The books are not just colorful and concise and beautifully presented. The best part about the books, it's very very understandable. It's very simple language. I have not made it too complicated. I believe in simplifying things, not complicating things. So I'll not give you multiple and a lot of books just to keep, unnecessarily bombarding the students. I don't believe in that. I believe in simplification. So what is needed in that one book, you will have everything. Okay. Even the summary part, which is there, the notes only are summarized in such a way that you will be able to, understand it there only. I'll show you when we study, you'll understand that. So automatically they become very important. And yes, the most important thing. Students ask, do we need to cover anything more? So answer is no, you don't need to cover anything more than these books. It's enough. Institute material, fully covered. Institute MCQs, fully covered. Institute related whatever RTP, MTP, past exam questions, along with the weightage, along with it, everything is covered. So our notes are, you can say, the Bible. This is all you need to see, nothing else. Do this well and you will get amazing marks. What is not covered is something which is futuristic. For example, in your attempt, what will be the MTP or the RTP that time, right? That additional thing only at that time you need to do. That is one thing. Second thing, but majorly in that all is also covered here. What happens in RTP, MTPs? You will get similar questions. Sometimes new things may come up that I will be putting separately on YouTube. So any updations are there, any different things are there, we'll be putting it on YouTube. So you have to subscribe to the channel and keep it. Okay, so this is what you have. Then coming to the thing, the last point, if you will see, that is our technique, which I call cast technique of study. First, we build on the concepts, right? How the concepts are built? We have our chapter, which is split up into clusters. Clusters means small, small parts. And then we learn the concepts. Once we learn the concepts, we learn how to apply the concepts, that is application, A. Then we learn S, that is speed, solving it in time. Because end of the day, you have to complete your paper in 3 hours correctly and properly. So we have to prepare for that also, correct? In practical subject like accounts and costing, the main problem is completion of the paper. It's always going to be a problem. For that, speed and accuracy are very, very important. Not that you're doing very, very fast and you're making a lot of silly mistakes. That cannot work. So accuracy also goes along with that. So that we have to get. That is the third step that we have to achieve. And then all this is properly done or no, we'll come to know in deep on, that is our tests. Whether we are going correct, whether we are getting the concepts, whether we are applying it correctly, and whether we are able to complete it in time correctly. All that we will be seeing in our T, that is our test. Okay. Again, I have a detailed video of this also, which is already on YouTube, because strategy and technique will not change ever. So this is how it is going to be. So now, coming to how you will get the best from our video lectures. See, I have given my commitment today to you that I will be doing all these things. I'll be doing my strategy, my technique properly. I will be doing everything here from my side. So I will need some things from you also, right? Because end of the day, you have to walk this path. Remember, we are there to guide you. So how will you get the best from video lectures? So I have devised 5 points which apply to you also. So the first thing that I want from you is A point. This A point talks about your attendance and attentiveness. Attendance here means that every single day, whatever it is, you have to be attending your classes, doing your class every day, because it will pile up otherwise. Suppose you're doing it slowly. Today I don't feel like doing this. I don't feel like today, whatever. That don't feel like thing is going to cost you a lot of time later. So you need to be attending the classes on a consistent basis, regularly. You have to be attentive during the class. Not that you're doing it on fast forward mode, doing it fast. No. Attend and be attentive. Concentrate, focus properly and do. This is what I want from you. The B point which I want is whatever books there are. Like you'll be having proper registers which you're going to be making. So notebooks that I'm talking. Those books have to be complete. No untidy handwriting. You should have it nice, clean, tidy, legible, readable properly. Neta, I've seen students how horrible they write now. They themselves don't understand afterwards, ma'am, what have we written? They'll ask me. I mean, seriously. You have to understand books and notes have to be complete properly. Very, very important. Also, today only I'm telling you that you will be needing at least 3 to 4 notebooks because you're going to solve a lot. You're going to be needing like 200 to 250 pages. You take the notebooks, no problem. Along with that, you will carry with you always 3 to 4 color pens, different coloring. Okay, blue, black, green. Keep multiple colors so that you can highlight, you can write important things, in different colors or steps. Normally I do in different colors for you to understand. Remember, exam you can't use this, multiple colors, only black allowed there. But here normally, when you're writing in a notebook for theory, for tables, it's good if you have colorful. 2 highlighters we need. Okay, 2 different color highlighters. 4 color pens. We'll of course need sticky notes because whatever important is there and all that you can stick in your notebook. It really helps a lot. These things now when you're studying later on, these help a lot. You know exactly, here that orange color sticky note, something I had written, and that keeps it is there in your mind. This is a simple mind mapping technique which we have, where your notebook is such or your textbook is such that everything is properly, what you have written here, why you have written it, where you made silly mistakes, you can have those things. So all that will be important when you have your books or notes. That's your B point. So from your side, I want all these things. Okay. The C point I want from your side is, I have already told you the importance of this today in the beginning, consistency. Okay, every time regularity is very important. Remember, consistency easily beats intensity. Intensity means you're doing few days, but you're doing a lot. No. You do every day, fair, not little, huh? No, little you can't do. You have to do good enough. But you have to do that. That's more important. Like 4 days I study a lot, then 3 days I don't do anything. No. Do 6 days, one day you take rest, no problem. But 6 days do properly. So that is what you have. Consistency and concentration. Along with that, Sita, you have to have your concepts clear. That too I'm here, but you also have to do it from your end. Correct? So discipline is important. Fix a timing. Fix a timing that these will be the 2 hours I'll be giving for the class. So you have to do that, fix it and do it properly. Discipline is required. Again, while this you're seeing your mobile, your lecture is going on, you're seeing your mobile. No, not acceptable. 2 hours, your notebook, your calculator, your things, everything there going on, and you are doing it understanding. Trust me, you will get the best. You'll always feel I'm there with you. Okay, so that's very, very important. So that's how I teach. I the same thing, discipline, dedication from my side also it comes now. So I want you to also follow it. And last, and the E point is the test that we have. Those tests you have to solve properly, sincerely, and most importantly, honestly. So honesty is totally an onus on you, correct? The 100 marks paper which we have, that I will be checking for you. But the normal test wise which are there, the solutions are there, we'll discuss it. That is different. But that honesty and sincerity is from you. Now you're not kids also, now you're working for your own career, so you have to be that much sincere and honest. Okay, so these are the things that we require from you, and if you do all this and promise me, I promise you to get really good marks, knowledge, and obviously you'll be happy after that, right? Happy, proud. So then, simple, briefly I'll tell you about myself. I'm CA Neha Lathi Mittal, and I have been teaching for last 15 years. I have come third and fifth in my CA P2 and CA final. That time we had got CA P2. Okay, so all over India I have stood third and fifth. Also, I have come in my 12th. I have been in the merit list in my BCom, MCom exams also. After doing my CA, I've also done my CSAR, DSAR. I've cleared all the 3 levels of my CFA US exam. I've done my DIP IFRS also, because now IFRS is like new, right? It is something we need to know. So I've done that also, the UK based, the London based exam which is there. So I've done that. Apart from it, I've been teaching for last 15 years. I already told you 30,000 around more only students I've guided. And these students have been in all types, face-to-face, virtual, pen drive, everything. Okay, so that's about me, and conceptual clarity and simplification, 2 important things I did, right? So that's how we try to learn the things. Now that I've introduced myself, I've introduced your syllabus, I've introduced your the teaching style, everything. So now we can start with our actual chapter, actual learning. So now we'll be starting with a very, very important topic, Schedule 3. Schedule 3 of the Companies Act. So in our accounts, remember, we have got 7 chapters, rather 8 chapters based on company accounts. So in company accounts, all companies are governed by the Companies Act. So now the Companies Act has said that you have to make a company according to the Companies Act, right? You have to get it registered, you have to comply with the conditions. Everything that the company is doing every year, annual return has to be filed, annual report is to be made, and even when the company liquidates, that time also it is as per legal procedure, as per Companies Act. So, but of course, even the entire accounting part, rather I would say that the Schedule 3, the balance sheet, the SOPL, the statement of P&L format will also be given by the Companies Act. And Companies Act will also tell you exactly how you are going to make the financial statements. So we have got section 128 and section 129 of the Companies Act, which talks about this. Basically what books of accounts are to be maintained and how the financial statements are to be made. So that section 129 says that when you are making your financial statements, you need to understand that you need to follow your Schedule 3, the applicable accounting standards, whatever Companies Act says, everything needs to be followed. So that part, the basic part of company accounts, we'll be doing little later. Okay, so that is like theory part. But then what it says is that when company is making their final accounts, they have to make it as per Schedule 3. So they have given a format. And all the company accounts chapters which we solve, we have to solve it according to that format. The presentation will go according to the format. So that is what is Schedule 3, which is given by the Companies Act. So now coming to this, our Schedule 3 is basically divided in 3 divisions. Okay, we have got 3 divisions. So now you can start writing in your notebook. Okay, give the heading Schedule 3. Some things we will be having here itself. We'll mark it, underline it. Some important things you'll write in your notebook also. So both the things keep handy. Okay. So now, like I said, Schedule 3 is split up in 3 divisions. Before I get to that, let me show you exactly how the notes are made. Okay. So you'll understand how it is done. So this, what I have presented before you, is the Schedule 3 as it is in the legal form as it is in Companies Act. So you will see here that we have got our Division 1, which is applicable for Inter. The instructions of how to make the balance sheet and P&L, we'll be seeing those instructions. So everything has been very nicely, covered over here, exactly as per the Companies Act. Just a little more color I have added to make it, easier to understand. So now this is the balance sheet format. Every single item we have to see in detail here. Okay. Then come to how the things have been defined. Then what are the disclosures, like share capital, what all things need to be disclosed, all that is given. Correct? So just I'm giving you a brief idea about how the notes are. Okay. So this is exactly how it goes. Borrowings, etc. What all things have to be covered. Now this is all the theory part of it. Fine. After the theory part, then we have got, like this is going to happen in every chapter. Okay. First we have the theory part, and then we are going to have some MCQs relating to that. I'm just going fast so that we can see the whole thing properly. Yes. So this is your SOPL. We call it Statement of Profit and Loss. This is the format for that. And we have to know the format by heart. That is something we just need to know. Then coming to our MCQs. Then we'll have some MCQs which are there. And then the problems. Now you will see what I was telling you earlier. Now every question which we have, okay, everything is covered. You have got the source of the question, like ICS study material. It has come in the MTP, it has come in the RTP, that is given. Some questions, no reference is given because these are additional questions which we have taken from reference books, or some of them I have only made. So we have got those kind of questions also. If you will see, everything here again, ICS study mat, MTP October question, like that. Everything is clearly given. So you know the source of the question, you know what you're studying, you know that you're covering everything. So don't need to bother. Okay. And here, because this is like a little theory chapter, so I've given you some answers with solution. But this doesn't apply to all the chapters. All the chapters we have to solve. This is only for Schedule 3 because it's a theory based chapter. But still, in spite of this, we will still solve it. The important ones in our notebook. Okay. So this is how it goes. So again, study material, all the sources are there. So you don't need to bother about anything. Everything has been covered. Remember that like I told you in the beginning only, everything has been properly covered. So please don't take any stress of anything like whether this, that, what we have to cover, nothing. You just have to cover this. Okay. I told you, consider this to be the Bible of your advanced accounts. Now coming to our thing. Schedule 3, like I said, Companies Act gives you the format. And here, it is divided in 3 parts. Okay. 3 divisions we call it. So what are the 3 divisions? Let's see. This Division 1. Okay, this Division 1 deals with those companies to whom accounting standards apply. Accounting standards and Ind AS, 2 things are there. Okay. Ind AS, the full form is Indian Accounting Standard. I'll explain to you. You can write down this. Okay. So as I was saying now, our main we have got is our accounting standards. Okay. This is just for your understanding. Accounting standards which apply to your individual entities, you can say it applies to small size companies, partnership firms, basically everybody. Then we have got some Indian accounting standards, which in short we call Ind AS. Basically, these are based on international accounting standards, IFRS, International Financial Reporting Standards. Okay. These Ind AS, which are based on IFRS, apply to big companies, like listed companies and all. So this part, only you have got very basic, like what are Ind AS, what is IFRS, how it is based on that. This part is all covered in your CA final. This is your CA final syllabus. So you have to only understand accounting standards. Okay, first thing. What is Ind AS and all that little bit I will tell you when we start with the accounting standards, book number 2. But right now understand, the normal companies, smaller companies, private companies, they all follow generally accounting standards. Applicability of AS is a separate concept which we will be learning in our accounting standard book. So right now just understand that division 1 deals with those companies to whom accounting standards apply. So only this applies to you, CA inter. Okay, and then division 2 and division 3 deal with the Ind AS companies. So the format of the balance sheet, the SOPL is separate and different for them. So this is what you have to understand. Our schedule 3. Okay, this schedule 3 is split up in 3 parts. Write properly in your notebook. This is very important. So schedule 3 is in 3 parts. Division 1, division 2 and division 3. So what are these 3 divisions? Division 1 deals with those companies. FS means full form financial statements. Okay, financial statements of companies. FS of companies which need to comply with accounting standards. So division 2 is FS of companies which are to comply with Ind AS. So Ind AS, the listed companies, big companies, for them division 2 applies. And division 3 is the FS of NBFCs. Now what are NBFCs? Non-banking finance companies. So they businesses like banks, but they are non-banking finance companies. Best example you have got practically, you have heard of Bajaj Finserv, right? You have heard of Cholamandalam or Tata Capital. These are all NBFCs. They do business like banks. They give loans and all, but they are non-banking finance companies. So FS of NBFCs, again, which are to comply with Ind AS. So the Ind AS companies which are there, NBFCs, have to follow division number 3. So that is for them. Okay. Just for you to understand, here we have got 2 parts. In division 1, which we have got our first part which deals with our balance sheet. So part 1 is your balance sheet format, which we are going to be learning today and even tomorrow. This will go on. Okay. And then we have got part 2, which deals with our SOPL, statement of profit and loss. Short forms, for us it is okay, but in the exam you have to write full. So SOPL part 2, we have to learn both of these. Okay. Division 2 This is not applicable to you, but for knowledge sake, I'm telling you. Division 2, that is for companies which have to follow Ind AS. Their part 1 consists of balance sheet format. BS is balance sheet. And SOCE, statement of changes in equity. When we talk about financial statements, we have got mainly 5 things which are covered in financial statements. One is your balance sheet, one is your SOPL, SOCE if applicable. Okay, so it's not always there. SOC depends. If it's applicable, then that. Cash flow statement. And fifth one is your notes to accounts. All this is comprising of financial statements. So we have got SOC, but that applies only for Ind AS companies. So they have given the format there. So when I'll be showing you actual reports of companies, I'm going to talk about Reliance, Tata, Infosys, big companies. All of them have to follow Ind AS. So we will definitely have a look at this also. Though it's not in our syllabus, but to understand how practically things work. And part 2 deals with your SOPL. Okay. Division 3 also similar way, but again that's not really this. So these two things which are not in your inter syllabus, so only the first thing applies to you. This is your CA inter, and this will be in your CA final. NBFC is not there in detail in CA final, but little bit we have to see. But mainly it is part 2, division 2. So the point is, now we have to focus on division 1, companies which have to follow accounting standards. And as I said, which companies have to follow AS, ma'am? Which companies have to follow Ind AS? Applicability chapter later on. Right now, let us just understand what is the schedule saying. Okay. Highlighters, pencil, pen, whatever ready. So let's start now. Division 1. Financial statements for company whose FS are required to comply with Company Accounting Standard Rule 2006. These rules 2006 have got amended in 2021, and we'll be learning the amended rules in our book of accounting standards. Coming to the point now, Schedule 3 has given some general instructions. These general instructions are applicable for the balance sheet and P&L that you make. Now, these general instructions are also very important. Many students just skip the general instruction. They don't need it. They say it's not required. No. There are a few important things here which you have to understand. Okay. So the first thing we have got, when you are making your balance sheet, okay, you have to comply with Schedule 3. We understood that. Balance sheet, P&L both. But at the same time, if there is something contradicting, suppose my schedule is saying something and my accounting standards are saying something else, then what should you follow? Normally a person will say follow the schedule because schedule is under the Companies Act. But no, the schedule itself says that if accounting standards and our schedule, there is any difference in treatment of any item, you will follow the accounting standards. Yes, they have given more importance to the accounting standards. They're saying, no, you follow that, follow the Companies Act if required. My schedule will change accordingly. So they are saying that is fine. So this is why very, very important. The schedule itself has given more importance to our accounting standards. Understand, such a big thing. Okay. So where compliance with the requirements of this act, including accounting standards as applicable, require any change in the treatment or disclosure. So if you have to make any changes in the treatment or disclosure, if you want to add any item in the balance sheet, you want to delete some item in the balance sheet, to amend it, you want to substitute it, delete it, anything in the heads or subheads. Okay, see what are the subheads and subheads, I'll show you. This is the balance sheet format. Okay, so main head is equity and liability, shareholders funds is the head, Then subhead comes share capital reserves, money received against share warrants. So all this, if required, as per law or by an accounting standard, if you have to make any change to these terms, you want to make any addition to this, you want to delete something, you want to substitute something else for better understanding, for better presentation, then yes, you can make changes. This is what my schedule is saying. Very, very interesting. Okay. So first point, what they say, if any change is required in the treatment or disclosure, in addition, amendment, substitution, in the FS is required, it shall be made. See clearly, the same shall be made. Very clearly, the same shall be made, and the schedule shall stand modified accordingly. So very clearly they are saying, if there is any change, you make it. But yes, that case law or AS will have to follow. So in simple words, if I say, what are we trying to say? We are trying to say law or the applicable AS prevails over schedule 3. This is what this point is trying to say. If required, make those changes. So actually any changes are made? Yes, I will tell you. As we will go, I will tell you an example of the change which is made. Okay, later. Then, second thing which they say is these disclosures which are given, whatever notes are given, whatever things are given in my schedule, are in addition to what is required by my Companies Act. So Companies Act requires certain things to be disclosed in the FS, give that. My accounting standard requires something to be given, give that. Plus what schedule 3 requires to be given, give that also. So in other words, we are trying to say the disclosure requirements of this schedule are in addition to. See, this schedule are in addition to, not in substitution of what is required by AS, which are prescribed, and even whatever Companies Act other disclosures are required, those also need to be given. You have to write in your notes to accounts everything. Law, what it says, disclose, you have to give. You know what? Balance sheet, P&L, cash flow, 1111 page. And after that, we have got 80 pages, 50 pages, 100 pages sometimes of only notes to accounts. This is how it is. Annual report is like that. So what is this 80, 100 pages? This is all the disclosures required by schedule also, required by Companies Act also, required by my accounting standards also. Okay, so schedule is saying whatever disclosures there you have to give, you give. Plus you give disclosures as per my schedule 3. Okay, so what we are trying to say in this point is very clear. The disclosures will be which all? As per AS, plus as per law, plus as per schedule 3. All disclosures are to be given. This is the meaning of this point. Okay, so simplifying the points. We are just trying to simplify the language. Third, whatever notes to accounts you are giving, right? Notes to accounts will be given. After everything, we are having notes to accounts. Like share capital, note number 1. Then we have reserves and surplus, note number 2. All the details are given about that. So whatever notes are given in the notes to accounts, what we need to do with those notes? We need to explain the things, okay? We have to give information. We have to give description of the same. We have to disaggregate the items. Disaggregate means what now? See, when I say reserves and surplus, it's one head, reserves and surplus. But under reserves and surplus, you have got capital reserve, you have got capital redemption reserve, revaluation reserve, P&L, all that is called disaggregation. Okay? Aggregate something means getting together something. Aggregate. Disaggregate means separated. So whatever we have one big head, under that what are the components? What are the parts of it? That is called disaggregation. So disaggregation is what you have to do. So notes are there. In the notes you will give the information, disaggregation, and other information also which for items which do not qualify for recognition in the statements. Some things, very best example I have for this is contingent assets. Contingent assets we don't recognize in the books. So contingent asset, if required, you can give it in your notes. Actually, my accounting standard says no need to give that also, but still I'm saying if you want to give, you can always give. See, extra information is not a problem, provided it is not too much of extra information. Remember that, because that is my next point. Next point says that every item of the balance sheet P&L, okay, every item on the face of the balance sheet and the P&L should be cross-referenced with any information related to it in the notes to accounts. So I told you note number 1, note number 2, note number 3, 3.1, 3.2, like that you have to give the numbers. And everything is given there only in the format. I will show it to you right now. See. If you will see, this is the balance sheet format. Particulars column, note number. Second column is note number. So that note number means you have to give the reference. So for share capital, note number 1, full detail of share capital, note number 1, you will be writing all the information. Information disclosures required by Companies Act, by my Schedule 3 and by my accounting standards, everything. So that is what you have, note number 2. Like that, this is how it works. Okay. So give reference, cross-reference to the notes. Not only that. Next, what we have? Also, when you're giving detail, okay, see, a balance should be maintained between giving excessive detail, which is of no use, and not providing important information because of too much of aggregation. Means what? See, when you're giving information, I told you 100 pages are there. There's something called information overload. Too much of information if you're giving, then it might not be of much use. So you have to balance it out. Don't hide information which is important. What is necessary, that much you have to give. Don't give extra information which is of no use. Correct? So that's what you're trying to say. And don't give very less information also. That will be of, it will be incomplete. So you have to balance it out. That's a balancing act you have to do. So this point talks about what? Notes to accounts. Basically, what should we give in the notes to accounts? So notes to accounts, what do we have mainly in that? We're going to have descriptions, information, disaggregations, all that will be given in the notes to accounts. And any other information. Right? Give cross-reference properly on your balance sheet face. P&L face, you have to give the notes. Simple point number 3. So this is what we say. The first point we said what? In terms of, what did we say in the first point? Ki bhai, accounting standards, what you are having. If Schedule 3 accounting standard law anything contradicts, first you will be following that AS or the Companies Act. Schedule 3 will stand modified. Second point, what we said, disclosures are additional disclosures. What law says, what AS says, plus what Schedule 3 says, you have to give. Third point says what? Third point says that by notes to account should be proper, descriptive, and balance it out. Balance it out. Don't give too much, don't give too less. Okay. Next one. Next we have got is the concept of rounding up. Okay. Rounding off. Now see, we are talking about big companies. We are talking about big companies. So big companies will have like big amounts. So considering that a company is in crores of rupees, right? The turnover is in crores or something. And then you are having this rounding off. So you cannot write big amounts over there. How much you will write? So considering that, what happens here? You're allowed to follow your rounding off. So you can show the amounts in crores or lakhs or millions depending on what? Depending on your total income. Total income has 2 things in it. Okay, so total income has 2 things. Total income consists of revenue from operations plus other income. We will learn about this in a P&L format, okay, SOPL. So revenue from operations means the main sales revenue, the main business, what you have that, plus other income you see. If the total income is less than 100 crores, 100 crores less than that, then you can round off all the figures, balance sheet, P&L, every figure, notes, all the figures you can round off to the nearest hundreds, thousands, lakhs or millions. You can do that, or decimal thereof. That's okay. So I hope this is clear. So it depends on the total income. If total income is 100 crore or more, remember 100 crore or more, even 100 crore comes here, then you can round it off to millions or lakhs or millions or crores. So maximum all the big companies do it in crores only, what we have seen. Smaller companies normally do it in thousands. That's how it is. Millions, little in our Indian context, we are still not so comfortable with millions, but my law allows it. Okay. So this is your rounding off. Rounding off, you have to remember two things. One, it depends on the total income. Hmm? And second, it depends that whatever rounding off you're doing, you have to use the same rounding off uniformly in the financial statements. Means what? Uniformly. So I cannot say balance sheet I'm doing in crores, and in lakhs I am doing my PNL, and in thousands I'm doing my notes. No, everything will be the same. So it will be crores, throughout it will be in crores. That is the meaning of it. So rounding off, very easy, simple provision. Okay. So fourth point is clear. These are general instructions given by Schedule 3. Fifth one, whenever you are presenting this year's financial statements, okay, for current year, let's say for the year 2023-24 you're giving. 2023-24, always you'll have one more column, which will be last year. 23-24, so it will be 22-23. For last year also you have to give the thing. One more extra column you have to add everywhere. Balance sheet, P&L, notes, everywhere extra column you have to add. Wherever amounts are there, you have to add that. This is compulsory. Okay. So except in the first year of the financials, obviously. First year of the company, how you'll give last year thing? Na? Sometimes law is so funny. Now obviously you cannot give, but fine. Other than that, every single year you have to give your comparatives. Comparatives means what? The last year, immediately preceding. Previous year, for all items shown in the FS, you have to give the breakup. This is purely for comparison, including notes. Everything has to be given. So this is purely for comparison. So when a person is seeing the balance sheet, seeing the P&L, he can easily compare what was there last year, what is there this year. That is the whole purpose of it. Okay. And lastly, whatever terms are used in this entire Schedule 3, whatever terms are used, this will be same as per the accounting standards which are applicable. So it is not defining the things. So for example, there is a PPE, property, plant and equipment, in my balance sheet. They have not defined what is property, plant and equipment. That is the meaning as per AS 10 PPE what it gives. We have written inventory in a balance sheet. We have not defined what is inventory. For that we have accounting standard 2 which will define it. So simple words may whatever terms are used, nothing is defined, everything is as per the applicable accounting standard. So this is what my basic thing is. And the last final point, whatever our schedule is giving is the minimum requirement. You want to add anything, you want to do extra, you want to put notes, you want to put some extra subline items, subtotals, whatever you want to add something, you want to substitute something, when it is relevant to understanding of the company's FS, then in that case you can do it and disclosures can be given for the same. So this is the format which is there. You have to comply with it maximum, but little bit here or there if you're doing because of requirement, then yes, you can do so. Okay, this is what my basic instructions are there before I start understanding the actual schedule. I hope this is clear. So 6 points we have, right? And this is how it goes. But now the real actual format, which is today's main highlight, we're going to learn that. We're going to see this now. Okay, so come on, let's go further. Now, let's see. This, every item that you're seeing, we have got detailed discussion of this in the next few, notes. You will see everything is there in the notes. For example, share capital A point is given here. Let's see, I'll show you. Share capital is given here. Now, if you will go down, this general instructions, so we have to then see share capital A point. Full share capital, what all needs to be disclosed is all given here. Second item that you have reserves and surplus, your B point, reserves and surplus. So today what we are going to do, today we are going to understand the basic format. Okay, we are going to understand the basic current and non-current things. And then we will be starting one by one every item, and then in detail we have to see what all in that item we need to give, the notes, the disclosures. Okay, so come on. Coming to the format. Today the format we are going to learn. You will think ma'am is making us learn the format. This is like what mechanical. No, it's not. See, some things we have to learn, right? Once we will do that in detail, it will automatically become conceptual. Okay? But this format we cannot change. So we need to know it. So we'll understand it. First we learn it, then we'll understand it in detail. So now the first thing, part 1 of Schedule 3, Division 1. It is called balance sheet. Balance sheet, name of the company you have to give. Let's say name of the company, Hindustan Unilever Limited. Balance sheet as at. Balance sheet as at. Such a small thing, right? But it is something which has been, we have been learning something else now till now. We always say balance sheet as on. So yes, we will continue saying as on, balance sheet as on 31st March 2024. We will say that. But we will say that mainly for our partnership firms or individuals, their balance sheet. For companies, especially they are saying balance sheet as at. Small change, but it is a change. You have to know it. Like we said, 4 columns, particulars, note number, this year rupees, figures at the end of current year. So let's say for example 31st March, if it is for 31st March 2024, then for last year 31st March 23, you have to give also the figures. This is what you have. Rupees in, it could be, remember, rounding off we saw, it could be rupees in lakhs, it could be in millions, it could be in crores, depending on the size of the company, it could be in thousands also. So now, this is what the first thing is. Now coming to what is the 2 main headings you have. What are the 2 main headings? One is our equity and liabilities. Earlier, we used to just say liabilities and assets. Now, specifically, we say equity and liabilities. That is my first part. And the second part you can see down we have got is our assets. See, these are the assets. So mainly 2 heads you have. One is our equity and liability. Second is our assets. Now coming to what is equity. So I told you today we'll be learning in simple words what it is. Detail we are going to be doing. Okay. So coming to it, first thing. Shareholders funds, equity and liabilities. What is the basic difference in the two? So equity stands for your shareholders funds. We are talking of a company. In company we are having owners who are the shareholders, and then we have got outside liabilities, right? Could be creditors, debentures, all of them come under liabilities. So 2 parts we have got, right? So the first part we have is equity, which is shareholders funds. Under shareholders funds, what we have first? Share capital. Equity share capital, preference share capital will be coming here. After that, we have got reserves. Reserves are what? They are profits which are kept of the company. The P&L balance is also kept here in the surplus. So share capital and reserves. Main shareholders funds. Third thing I have over here is share warrants. Now what are share warrants? Share warrants are like share certificate only, but it is like by delivery it can be by possession we can transfer it. So suppose I am holding a share warrant. It is saying I am a holder of 100 shares as per the share warrant. So today I am holding the share warrant. I am the owner of the 100 shares. Tomorrow I transfer it to someone else. Then that person becomes the shareholder. So it can be transferred by just mere delivery. That's called share warrant. But at the end of the day, who is having it is actually holding those shares only. So that is called share warrant. That will also be coming under your shareholders funds. So 3 things which come under shareholders fund: share capital, reserves and share warrants. Simple? Okay. Then coming to share application money pending allotment. In short I call it SAMPA. SAMPA means what? Share application money. Company has received some application money, but they have not yet allotted the things. They have not allotted the shares. That is called share application money pending allotment. Okay. Now that they will allot the shares later on. So some part of it will be going back into share capital. Some part of it may be refunded, so it will come down to liabilities. So it is like in between, it is a sandwich. It is not a pure shareholder fund yet, and it is not a liability yet. So we write it as a separate head, share application money pending allotment. Now, it may be possible that my company does not have any SAMPA. They don't have. Then they will not put this head. No? This is what my schedule 3 said. If you don't have it, it's not relevant. You can just cut that heading. You can add more things if you want. Depends on your business. Depends on your thing. So that's how it is. Share application money pending allotment. Now comes the most important part. Non-current liabilities and current liabilities. Okay. So now our liabilities which are given over here are split up into short, we call it NCL and CL. NCL means non-current liabilities, CL means current liabilities. My whole balance sheet, in fact my assets also are split up like that. Non-current assets and current assets. Means there is a lot of importance placed on your current non-current classification. That is again very, very important. We are going to be seeing that today. Okay. So non-current and current, what is the basic difference in the two? So for that, we have to understand what is current and non-current. I will take you there, but first we're just seeing the heads right now. So under non-current liability, I have got long-term borrowings, like long-term liabilities. Long-term borrowings, loan from bank and all will be coming there. Deferred tax liability. We are going to learn about deferred tax liability AS 22. Right now, understand deferred tax liability means we have to pay it later. It's going to happen later. Whatever happens with it will happen later. Deferred means later. So it's long term. That's why we put it over here. Then we have got others. Any other long term liabilities. Okay. And last we have got long term provisions. Provisions. Now what is a provision? Provision is a liability which you have to pay, but exact amount you don't know. Like when we say provide for depreciation, provide for bad dates. Okay, these provisions are, we don't know the exact amount. We're just making an estimate. Like that for long-term provisions, let's say you have to pay your employees some pension when they retire. Right? But that provision you have to start making now because they're working for you right now. So then in that case, you will start providing. But it is going to happen after long term. Then you put it under long-term provisions. Like employee benefits mainly comes here. Okay, so how will you remember these 4 points? You will remember them as LDOL. What is LDOL? Your long-term borrowings, your deferred tax liabilities, your O is other liabilities, and L is your long-term provisions. Clear with this? Then, coming to current liabilities. In current liabilities, I remember it as STOP. STOP. Current liabilities. So what is this current liabilities? Short-term borrowings. So loans which are payable in short term. So what is short term, long term? Current, non-current, we are going to see. But right now understand short-term borrowings like overdraft and all will come here. Then trade payables, your creditors, bills payable, they will be coming in trade payables. And especially they have given an A and B point here. See, any outstanding dues of micro and small enterprises. No, micro and small enterprises are there, like small businesses. Big companies take goods from small companies and small individuals and enterprises, and they don't pay in time. So it is like exploiting, na? So that's why government is like, you should have this in the law. Show what is due on the face of the balance sheet. Then we can come to know, are they out of their trade payables, small people, micro enterprises, so much of liability they have. So that is like, kind of a moral check on them. They will make their payments in time. This is what you have in total outstandings of micro and small enterprises. And then if other than micro and small, whatever are there, then you have to show the breakup over there. Other current liabilities is O and P is your short-term provisions. So this is how your equity and liabilities appears. I have not explained even one term to you completely. It is all general we are getting right now. Every item we have to discuss in details with the disclosures. But understand, for now, for the time being, what you have to understand, Equity and liability, there are four main heads: shareholders funds, share capital, reserves, and share warrants. Money received against warrants. Second, sampa. Third, non-current liabilities, LDOL. Long-term borrowings, deferred tax liability, other non-current liabilities, and your L, your long-term provisions. Got it? And your current liabilities is stop. Stop mein what we have? Short-term borrowings. T is your trade payables, your creditors and all. O is your again others, and P is your short-term provisions. So this is how you have your basic format of your liabilities and equity and liabilities. Simple? Okay. Now we'll go further to our assets. Now in assets, we have got only two heads in assets. Very good. Only two heads. And in two heads, what we have? So the first one I have is what I call as PNDLO. PNDLO. What is this? This is my non-current asset. Only two heads. Non-current assets. PNDLO. What is PNDLO? The first P we have is property, plant and equipment. So this PP and intangible assets, basically your fixed assets. Earlier we used to call it fixed assets. Now we call it PPE. So what is the difference between property, plant, equipment and intangibles? So your tangibles, which are tangibles, okay, those tangibles are like what you can actually have physical substance. You can see, you can feel, you can touch. Machinery, furniture, vehicles, building, land, all these come under PP, property, plant, equipment. Intangibles means what? No existence physically. And in 11th, 12th, what we learned? You can't feel, you can't touch, you can't see. You know that is intangibles. So intangibles like goodwill, patents, copyrights, all that will be shown over here. Okay. So we have PP, intangibles. If your PP is getting ready, suppose a building is getting ready, then you will call it capital WIP. All this is the breakup of these. And intangibles under development. So it is a very self-explanatory point. PP and intangibles, so two are there, and two which are getting ready. Tangibles getting ready are called capital work in progress. Intangibles getting ready are intangible assets under development. So this is what you have. P is PP and intangibles. N is your, you call it non-current investment. So long-term investments which are there, right? Company has made investments, they show it over here. Long-term, short-term, they have it down in current assets. We'll see. D, deferred tax asset will be coming here. Like deferred tax liability was on the non-current side of liability, NCL. Here in NCA, we have got deferred tax asset. Then L we have got is your long-term loans and advances. If company has given loans, given advance to someone, it will be shown here. L, long-term loan advances. And O stands for others. Others is our favorite because we never forget others, right? If we don't know where anything goes, we put it under others. So that is what you have in others. PNDLO. Okay, so these are my 5 points here. And the last one we have got is current assets. Now under current assets, we have got CIT, CSO. This is all for you to remember. CIT, CSO. What is CIT, CSO? First C stands for current investments, short-term investments which are there. Then inventory will be your current asset, right? T is going to be trade receivables. Trade receivables means debtors, bills receivable, that will be coming here. Cash and cash equivalents. So cash and cash equivalents will be coming in my this point. Like AS3 we have got which talks about cash equivalents. What are those? Like cash balance, bank balance will be coming here. S, short-term loans and advances. Long-term loans came up, short-term loans and advances came down. Non-current investments came up, non-current investments, current investments came down. Other non-current assets came up, other current assets came down. So that is my O point. So 6 we have got here. So this is how your general format is of the thing. I hope this is clear. Okay. So Like I said, everything you will see accompanying notes to the FS, because everything in the notes, it has to be cross-referenced. That's what they say. Okay. So again, we'll just see the format once because that's very, very important. So what we have first, we are having our equity and liabilities. Equity and liabilities. Under that, we have got mainly 4 heads. First is your relating to your equity. Under equity, you have got your shareholders funds. There you have got share capital, reserves and warrants, money received against warrants. Second, you are having your SAMPA, share application money pending allotment. Third, you are having your non-current liabilities, NCL. You have to repeat with me, say it with me, think I'm there. You have to say it with me. Non-current liabilities, okay? There you have got what? Your LDOL. LDOL, long-term first loans, borrowings, long-term borrowings. Then D stands for deferred tax liability. O for other non-current liabilities. And last, like other long-term whatever is there. And then we have got the L, long-term provisions. And the fourth and the last one, you have current liabilities. Current liabilities may we have got stop. Stop means S, short-term borrowings, T, trade payables, O, other current liabilities, and P, short-term provisions. Then coming to our assets. Breakup may in trade payables you have to show separately, which is due to small and micro enterprises, and other than small and micro, you have to just show it separately. And coming to our assets, we have got non-current and current, only 2 heads. In non-current assets, now when I talk about heads, we are having 5 subheads in that. What are the 5 subheads in that? Are P and DLO. P, PP and intangibles. Under that we have got your PP, your intangibles, capital WIP and your intangibles under development. Then we have got, this is all P. Then NDLO. What is NDLO? Your current investments, long-term investments. D, deferred tax asset. L stands for your long-term loans given. And O, favorite, others. And then we have got current assets. Under current assets, what do we have? Current assets, CIT, CSO. C is your first current investments. I, inventories. T is your trade receivables. C is your cash and cash equivalents. Then S, short-term loans and advances, and O, others. This is a format which you need to understand. Now, according to me, today's most important discussion. We saw that a whole balance sheet is based on current, non-current. Today's homework is going to be you have to revise that format properly. Okay. So now, today's most important discussion. We saw that the whole balance sheet is based on current, non-current, right? So what do you mean by current? What is current? So for that, they have given in balance sheet, how do you understand? There are general instructions given for preparing balance sheet. In that they are saying, an asset shall be classified as current. So when will an asset be a current asset? When it satisfies any of the following criteria. Any of the following. There are 4 criteria which are given. Any of them is fulfilled, you will call the asset a current asset. Right? So what is the criteria? And with a lot of examples we will see now. First, it is expected to be realized. You are expecting to realize it. Realize it means you will be getting cash for that. You are going to get some money for that, or you will get a check for that. You will be able to get something for it. Okay? You will realize. Or it is intended for sale. You want to sell it. Or it is based on consumption. You are expecting to consume it. Right? In the company's normal operating cycle. Oh my God. One A point and so many things. But nothing to worry. Understand one by one. We are saying what is current. Current is something where you are expecting to realize something. So what do you expect to realize? Let's say you have some debtors. Debtors or bills receivable. Let's take for realized. debtors, bills receivable. You are going to realize money for that. So you are expecting. It is expected, remember. Exactly when you will get, you will not know. Na? Expectation. So you are expecting that you will realize that thing, debtors BR. Or you are going to sell it, is intended for sale, means you want to sell it. You're expecting that you will be able to sell it, means it could be finished goods. Finished goods are meant for selling only, no? So you are intending to sell it. Or consume it. Consume it, best example, raw material. What is raw material now? Raw material stock you have. What you're going to do with raw material stock? You're not going to sell it. You're not going to realize it. You are going to use it, consume it. So raw material, consumables, they come here. And this you're expecting this is going to happen within the company's normal operating cycle. So now we have to understand what is operating cycle. So operating cycle is point number 2. See, operating cycle is point number 2. We have to write this by the way, but we'll understand it first. Operating cycle is the time between what? Acquiring the asset, right? You're acquiring an asset for processing it, then realizing it in cash, and if you cannot identify, it will be assumed to be of 12 months. So operating cycle basically means what? By the time when you buy your raw material, then this raw material will be made into WIP, work in progress. Then it will be finished goods, packing material, all that will happen. And then you will be selling this. And then finally you will be getting cash when you sell it. So this whole cycle is called operating cycle. The time between when you acquire the assets and till the time it becomes cash. This whole cycle, then you will count it as 12 months. This is what my schedule 3 says. Okay. So let us write down the meaning of it. Write in your notebooks. Come on. Very, very important. Right on the top. Very, very important. Right, first operating cycle. First we have to understand that. So operating cycle, operating cycle operating cycle is the time between your acquisition of assets. Right now, operating cycle, acquisition of assets, for processing, till the time it is realized in cash. Till what? Realization in cash or cash equivalents. Cash or cash equivalents. So the time between this. Okay, so this in between time is called the operating cycle. Time between acquiring the asset and realizing it in cash. How do you calculate it? Write down the calculation part. There's a simple formula. Calculation part, the formula is starts with your acquiring. So you're doing a business of manufacturing something. So first you will acquire the raw material. So first we have got is raw material. First comes what? Raw material. Raw material holding period plus what will you do with raw material then? You will convert it into WIP. You're going to make finished goods. In between, you will have WIP. So WIP holding period. This HP I will use for holding period, short. Work in progress. So it is still getting ready. Then you have got any packing material is there. Then that will be their holding period. Then finally the finished goods are there. So finished goods holding period will be there. It takes time, na? Maybe your manufacturing takes about say 15 days. Then your WIP packing takes about say 7-8 days. Let's say your raw material is holding for that time. Then this takes time. Then the finished goods you're holding for another 1 month before you sell, right? After selling, you give debtors 2 months to pay. So then your operating cycle is the whole thing. Totally you have to take till the time you realize the cash, not till the time you sell it, till it gets converted to cash. So plus the last one is your debtors collection period. Because you have to convert to cash. So if you see, it starts from acquisition and realizes this. This whole time in between is called your operating cycle. If nothing is given in the sum, you assume it to be of 12 months. If it is not available, not given, you take it as 12 months. So that's my point. If it cannot be identified, if operating cycle cannot be identified, assume 12 months. And if you have multiple businesses are there in one single company, you can have separate operating cycle for each business. Possible. One operating cycle is 10 months, one is 12 months, one is 18 months. Possible. So that is what we have to know about operating cycle. Okay. So before we go ahead, we have a simple sum on calculation of operating cycle. We will see that first. And then how to identify whether it is current or non-current, we will see. Okay. So come to problem number. Problem number, I guess, 2. To see problem 2. B produces aircrafts. The length of the time between first purchase of raw material to make the aircraft and the date they complete the production and delivery is 9 months. The company receives payment for the aircraft 7 months after delivery. So time of making everything is 9 months. After doing the aircraft, they get the money after 7 months of delivery. So what is the operating cycle? It will be your 9 plus 7, total 16 months. I'm sure this is clear, very easy. And how would it treat its inventory and debtors? So inventory debtors is like your assets. You will treat them how? If you're going to realize in the normal operating cycle, you treat it as current. Correct? So that's what they're saying. So we'll be taking it as current assets if it is expected in the normal operating cycle. That's what we have. Okay. One more problem, number 3, very easy. Compute the operating cycle again. Raw material, WIP, finished goods, debtors collection. All the periods are given. What you will do? Simply add it. 3 plus 1 plus 5 plus 5. So total 14 months is your operating cycle. If we didn't know this 14 months calculation was not given, then the business you will assume it to be simple 12 months operating cycle. So just 1 or 2 sums we have on this. Okay. Now, We have some more sums on this, but first we'll go back to the theory, we'll complete the concept. So coming now to our next thing. Back to, we were understanding what are current assets, right? The current assets which they satisfy any of the criteria. What was any of the criteria? First one, it is expected to be realized in, or it is expected to be consumed in, or it is intended for sale. And in the normal operating cycle, you are expecting to get this. Then in that case, you will be calling it as a current asset. Now, second one. A current asset is also one which is primarily held for the purpose of being traded. So the whole purpose of it is selling it. That is your whole idea of having it. Okay? Being traded. So best example. Stock in trade. Now you are a retailer. You are a retailer. So as a retailer, what you're doing, you're buying the goods and you're selling the goods. Am I right? Do you come in a point, are you expecting to realize a debtor's fine? But are you consuming anything? No, you don't have raw material. You're not making WIP, right? You're not doing finished goods. For you, it is simply buy and sell. So the whole idea of having this is like, you want to buy and sell. So then that is going to be a current asset. Now here we come to a very important point. Many times students get confused between A, B, C point. They confuse things. I'll tell you how. I'll complete C and then I'll explain. C point says what? Any asset. But if you're expecting that you will realize it within 12 months after the reporting date. After the reporting date means from the balance sheet date. You are expecting that within 12 months you will realize something. So I'm making the balance sheet on 31st March 2024. And I am expecting that I will realize any item which is in my assets by 25 and 31st March 2025. Then I will call it a current asset. Okay. Now I'll tell you why people get confused. First of all, they mix A and C point together. A and C point, there is a basic difference in the two. A point says you are expecting to realize it or intended for sale or whatever in the normal operating cycle. The normal operating cycle can be even 24 months, can be even 36 months, can even be 6 months. It can be anything, right? So that is one point. If operating cycle is not given, then 12 months. And C point which we are talking is 12 months from the reporting date. From 31st March, I am going to see it. Now, see, I'll explain to you with some examples. Okay. So let us take a few examples. You'll understand it very good with the examples. So, let's say for example, there is a debtor. Okay. Your debtor's collection period is, for example, let's say 6 months. Normally they pay you in 6 months. Okay. Your operating cycle is, let's say, 9 months. Just for understanding. So where will you show these debtors? Will you show them as a current asset or non-current asset? I'm sure the answer is very simple for you. Because you are expecting to collect it within the normal operating cycle. Your normal operating cycle is 9 months. So I'm using my point number 1 here. Point number A. That point number A. Expected to be realized in this. So in this case, my debtors will be considered as current asset. Why? Because in the normal operating period. Normal operating cycle, expecting to realize it. Easy. Now, this we were seeing in our normal case. When we sold the goods only, we were expecting it, so we took it accordingly. Now let's say a second example I will give you. my debtors collection period is, let's say, 14 months and operating cycle is 16 months. So now what will you say? What will you say? Will this be a current asset or a non-current asset? You will say, are 12 months? You will go to point number C and get confused. 12 months, 12 months. 12 months, why you're going to 12 months? We don't need to bother about 12 months because your operating cycle, it is within, operating cycle is 16 months. So it is within that period. So then in that case, here also, your debtors are going to be a current asset. Why debtors current asset? Because again, it is within the normal operating cycle. You're expecting to collect the money. So even it is beyond 12 months, still it is considered to be this. Okay. Third example. Debtors, let's say debtors, now let's just change the example a bit. Let's say the operating cycle is 18 months. Okay. Debtors expected to pay in 10 months, 13 months, 19 months. See, some debtors might pay in 10 months, some might pay in 13 months, some might pay in 19 months, some might pay in 5 months. That is all possible, right? So now you are saying debtors are expected to pay in 10 months. What will be the answer for this? 10 months. So definitely it is within the operating cycle. So this will be current asset. Am I right? Current asset because it's within the operating cycle. 13 months when I talk about, it is more than 12 months, but still within the operating cycle, still current asset. And then we have got 19 months. 19 months, what will we do now? Going beyond the operating cycle, right? So then that will be considered non-current asset. So you have to go according to this. You have to see your 31st March when the debtors are expected to pay the money. Okay? If it's operating cycle, straight away current asset. Otherwise, is it within 12 months of 31st March? Still it will be a current asset. Okay? Then operating cycle 10 months. Debtors expected to pay in 12 months. What will this be? I hope you got this correct, because if you have said this is a non-current, then it is wrong. See, 10 months operating cycle. You are exceeding your operating cycle, but it is within 12 months now of the reporting date. Within 12 months of 31st March. Yes? So in that scenario, you will consider this as current asset. Why? Because within 12 months of balance sheet date. So here 12 months comes in picture. So what am I trying to tell you? I'm trying to tell you a very simple thing here. You have to understand this in the context of which is higher, you see, whichever is higher, 12 months or operating cycle, and your work is become easier. So what you see operating cycle, okay, or 12 months, whichever is higher, you see, and you take that as your base. So if operating cycle is 6 months, 12 months, what will you take? You will take 12 months. So anything which is within 12 months receivable, you call it current asset. Simple. Then you don't need to bother about the operating cycle. You are taking the higher of the two, because even if it is 9 months, 10 months, 11 months, you are expecting something, still it will be coming under current only. Okay. Then if operating cycle is, let's say, 18 months, this is, let's say, 18 months or 12 months, you will take whichever is higher, so you will take 18 months. And therefore anything which is receivable within 18 months, you will take it as a current asset. As simple as that. So just to make it simple, take whichever is higher and your work is done. Okay. Now comes a very, very important thing. Suppose there are some, okay, let's see, there is some inventory that is raw material expected to be used or finished goods expected to be sold after 20 months. You think there is slow moving inventory, the finished goods are not selling only, it has been lying there for a long time, and I think more 20 months it will not happen. My operating cycle is 12 months. Let's say, assume operating cycle is 12. Nothing I'm saying, to assume 12 months. So what will you call this? Current or non-current? Many students are going to say now, I know, they're going to say, man, this is non-current. Because beyond 12, 20 months, no bacha, no. This is still a current asset. What? So confusing. No bacha, not confusing. We are talking of inventory. We are talking of finished goods. These are meant only for selling. These are meant for trading. In that scenario, it does not matter. You intend to sell it only now. Whenever you sell it, your intention, today also someone comes, you will sell it, right? So what is expected is different here. Okay, so if there is a slow moving finished goods and all, because it is meant for sale, inventory by default, inventory will be always current asset. Why? Because it is meant only for always current asset. Why? Because it is meant for use, sale, consumption. That is what it is for. So it will always be current asset. Understand that. Okay. So mainly when we talk about this 12 months and this, we normally see debtors and creditors and loans given, something like that. So one more example I'll give you now. Sixth. Last one example for current asset today. Loan of 10 lakh given on 31st March 2023. Okay. Repayable in 5 equal installments starting from 31st March 24. So now you have given a loan to somebody, 10 lakh rupees, 5 installments means you'll be getting 2 lakh every year. So now you have to tell me, how will you show this? On 31st March 23, how will you show this? 31st March 24, how will you show this? How much you will show as current asset? How much you will show as non-current asset? Think. Then I will give you the answer. Think. So now, I hope you have got something in your mind. 10 lakh you gave on 31st March 23. So today 10 lakh total is outstanding. But out of that, 2 lakh you're going to receive in 12 months by 31st March 24. So 2 lakh becomes current asset because you're going to receive it within 12 months of your reporting date. Why 12 lakh? Why 2 lakh is here? Because it is receivable within 12 months of reporting date. Means balance sheet date within 12 months of reporting date. And remaining 8 lakh you will show under non-current. Make sense? Hmm? Now what will happen next year? Next year, assuming that you receive the installment, this 2 lakh which you were showing you received. Now how much is outstanding? That time 10 lakh was outstanding. Today 8 lakh will be outstanding now because 2 lakh you received. One more 2 lakh you will receive in 2025, expected to realize within 12 months. So this is for the 2025 which payment you will receive, 31st March 25. Right? And therefore the remaining 6 lakh will be shown as non-current. So here I am not seeing operating cycle and all. Why will I see operating cycle? This is loan given. Loan given has got nothing to do with operating cycle. Then what we see with operating cycle? We will see like debtors, inventories, that kind of thing. Inventory, so don't even bother. It is going to be it is going to be current only. So mainly debtors and other things which you're going to realize. So I hope this is clear now. This is how it works. Okay. So with this, I guess my current asset part, only one small point is remaining. We'll see that now. I have taken down all the examples properly. Today only current asset, that's all we are doing. Liability we'll do tomorrow. The last one we have is cash or cash equivalents. So cash also by default, cash will always be a current asset unless it is restricted from being used. If you cannot use it or there is some restriction and you cannot use it for at least 12 months from that restriction, so in that case you will not show it under current. Like you have made some deposit, some FD or something you have made, for example, which you cannot immediately use within 12 months, then that we can think about. Okay, but normally case cash equivalent you will take here only in your current asset. So simply 4 things, any criteria satisfied. So you don't satisfy A, then you satisfy C also, okay. That's why when I say A and C, I see it very easily. I say whichever is higher and I finish it off. I don't bother about the operating cycle when I have 12 months easily in front of me. I take operating cycle in picture when I see operating cycle is bigger than 12 months. That is when. So these are the 4 points. And any of this, it becomes a current asset. And any other thing, all other assets are non-current. So non-current is not defined, current is defined, and remaining will be non-current. So right now when we saw the loan given, we saw what is current. Remaining is non-current. We didn't bother what is non-current first. Current, then we'll balance non-current. So I hope today what we did is clear. Today we learned 2 major things. Schedule 3, basic. Saw the basic format of the balance sheet. Only format, nothing else we have done in detail. And yes, current asset and non-current asset, basic understanding. Tomorrow more of this. That's it for today. Today you have to just revise whatever we have done so far. Okay. See you tomorrow. Always keep smiling. Be happy. Bye-bye.